The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This Monday, June the 16th, my pleasure to be here. And, in fact, we have started, I think, summertime in Boston. I got a feeling it's coming in, and it's going to come in real good. So, pleasant day to you all. I hope you had, those of you celebrating that Father's Day, I hope it was good. And as far as I'm concerned, this is going to be a very important session. Couple of reasons why. Everything about the opening last night was saying steady, 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 then slowly the air came out of the futures, and the futures went down to a -3, then a -6, then a -9, a -10, and then all of a sudden there was a little bit of a rebound. That rebound actually came right through into this morning. And not only did it rebound, but in fact, the E-minis went positive and went, this is the September contract, opened at 928, went all the way to 933.50, trading now down one at 1927.50. So what is going on? That's the big question. And I'll give you my assessment. Let me just run the numbers first, and the numbers go like this. The Dow at this particular point is down 18 at 16,757. The S&P is down, let me just double check here. The S&P is down 0.94 at 1935. The comp index is down 5 at 4305. Now this is going to be very interesting. Why? Because you've got gold that was up. I watched it closely last night. It started kind of creeping up. It got to about a +7 or something, +8. And then it pulled back. And right now, where's gold? Gold is up $1.60 at $12.75. Silver's up 0.01 at 1966. You've got high-grade copper. High-grade copper, now this is going to be very interesting as well. Let me just give you the high-grade copper. I'll come back to this chart that I'm showing right now on Tiger TV. Yeah, copper's trying to bounce a little bit. It's a 3.04. Everything about it says to me that it's probably going to go under 3, but we'll deal with that as the time comes. Meantime, back at the ranch, and this I think is really important. Within the context of everything, bonds are up 6:30 seconds at 1:35 and 31:30 seconds. Now, why is that important? Because I said to my subscribers to my opening call, that's my very comprehensive daily service that goes to different parameters that people need to look at, the different clues you can use, the volatility index, a whole bunch of things that I consider to be very important intraday as well as for the larger perspective. When I look at the charts over the weekend, I sent out charts. They're my Monday charts, but since I do them from Friday's close, I start working on the charts. I sent them out during the weekend. So it was really important in that what it showed was that the weekly charts of the Dow, the diamonds, and most of the indices at this particular point haven't given a peak because they were new highs last week. And that makes this very important. Why? Because in the context of sell signal to sell mode in the daily, by the time you get to sell mode, invariably you've gotten to a sell signal in the weekly charts. And this hasn't happened. I've got sell modes in the Dow, the diamonds, and the S&P, and other indices. But so far, what I'm looking at is I need the verification in the weekly charts that there's even a peak, that there's no new high this week. So that's what I'll be looking for. The dollar is down 13 cents at 80.52, euros up a tad. Now, what I've shown here is there's a particular pattern. I'm not sure I'm going to be able to get to it from my CD, but it's a pattern that I call the falling axe on the way up, but it also works on the way down, and that's going to be very important. Why? Because in this particular 120-minute chart pattern of the E-minis, if there is a break underneath 1919, now that's 8 points away, it's like 100 Dow points. If there is a break under that level at any point in the next, I'd say up until tomorrow. Oh, well, actually, I shouldn't say that. And in the next point, in the next couple of days, what will happen is immediately 1960, the 200-period exponential moving average becomes a target. And then I have a left side, right side price time match, which says later today, early tomorrow, we could be testing that level of 1919 if, in fact, there's a failure pattern towards the close today. Now, I loved what happened earlier in the session. Why? Because we tested almost to the penny in some cases certain areas that have thus far failed. The day is young. We're not even 2 hours into the session. But as I'm looking at it, this is going to be such an important moment in the patterns that I'm looking at, because we've already set in place a whole bunch of shorts. Last week we did that based on the Chapman wave methodology. I didn't have anything, in fact, other than two technical tools that I use that I showed to my subscribers, and based on that, but most importantly based on my Chapman wave methodology, you can see here that the E-minis made this doji candle on the 9th of June at 1947.25. To me, the letters of the alphabet in the Chapman wave they become so important. So what I want you to do right at this particular moment is I wanted to go through a couple of things to show you where I'm looking at over the weekend. I'm looking at strands, CMG, Chipotle. Now, I was in two different areas where there were Chipotle Mexican grills, and I peek in and I look around and say, what do they have that people just seem to love? I've never eaten there, but all I can say is chart pattern wise, this is so critical. The next two sessions, why? Chipotle at 591.58 up 3.32 is in leg A. Now, the indicators I was talking about just a moment ago that was so important to me to at least establish short positions in the Dow and different indices, I'm looking at them right here, and I'm saying, whoa, there's a chance that Chipotle could go higher because I've got a leg D still missing. I don't know what to call it in the monthly chart. I mean, I've tried every which way to count it. This is a peak C, and C's don't usually fail in monthly charts. You usually get to at least a D. So in looking at this, I'm saying to myself, if Chipotle is acting strong, if General Motors today was earlier on, yep, it's up 23 cents at 35.86, is able to rebound and not fail, if Ford is able to rebound, I don't think it can right now, but it's at 16.55, it's unch. If Alcoa, which had a spectacular day on Friday, is able to continue higher, if X Steel, that's U.S. Steel, is able to break out above the 24.70 level, it's trading at 23.91. If there are a lot of ifs, if Aetna, insurance company that we had a really nice trade in, but I treated it as a trade. I should have held it as a long-term position. Had a beautiful island reversal at its lows back in April, and is now trading at all-time highs. Oh, this is interesting. 81.25 was the high on that was Wednesday. Thursday, Friday. Yeah, Wednesday, and today's high is 81.23. Now, we have exactly the same thing in the IBB. The IBB made a high of 250.61 on the 250.61 on that same day, the Wednesday, and today tested and went to 250.44. If you're looking at the IYT, which is the this is the iShares Dow Jones Transportation Average Index Fund, leg E in the monthly, leg peak D if there's no new high this week above 148.18 in the weekly chart, and then the daily. This is the one here. I'm going to drag it across. This is the one that's usually on the left, the daily chart. Made a doji, a tiny little doji. When you're going to all-time highs, do you remember Apple? When Apple went to its all-time high, it had the tiniest little doji. Tiny little doji. Sounds like I'm talking to my grandchildren. But how, when these prices are accelerating and you have such wide price movement, do you get the absolute? It encapsulates this vision of this tiny little doji, this little candle right there. Let me expand it so you can see. When you're going to all-time highs, isn't that a sign of weakness? Isn't that a sign of failing strength? I think it is, especially when you follow it with another doji failure pattern the next day. So the transports seem to me like they're in trouble. And one of the reasons why we've implemented a short in the transportation sector is I think that the high crude oil, as well, I wouldn't be surprised if we're going to start seeing reports of slightly weaker numbers in the economy coming up. And if you look at this, you'll first of all get the emotional ones, all the sentiment ones, the consumer index, all the stuff that you can, all the technical data that pertains to emotion, not the reality. And that's going to be very important because it's the sentiment is really what accelerates as the prices start to fail. That's why technical analysis. That's why for my subscribers, I love them to study these charts. That's why I take the effort over the weekend to send them out. I send as many charts. I talk about the Chapman wave. I talk about the waveform. And that's the only look, it's a peak F. And the Chapman wave, a peak F, is serious stuff if you start to get the technicals fading. The candles that we're looking at in the IYT are exactly the candles you look at that says time and price to the downside in the daily chart. But wait a minute. The weekly chart doesn't give me any signal in price, but now I look at the technicals, and the technicals are saying, hey, we went to this last high without verification in the technicals. When we went to that peak D at 135.93 in the IYT back on the 24th of week of the 24th of January, our technicals were way higher than they were here, except for one. And that one is so important in my work, and that failed on this recent rally. So I'm watching the transports really intently because I got a feeling that if slowly, one by one, you start to see the important sectors. Hey, let me do this. You know my Dow quartet that I talk about? GE, IBM, Triple M, and UTX. UTX being my pilot light. GE being the in the bigger context of the Dow. GE being the shorter term one. Look at this. G, and an E. Type it incorrectly. There are. Bad. Down 27 cents at 26.77. Weekly chart, probably a peak F, long-legged doji. Couldn't even retest the candle. I'll talk about GE, IBM, Triple M, and UTX when we get back. And I'll be testing something out for my engineer, Al. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We are back, and Dow's down 27, S&P's down 2. Oh, every news becomes bad news when you go into the bear phase. This is going to be so important in my work. I'll tell you why. I make a big deal about the volatility index. I've spoken for so long. Let me just have a little sip of something here. Aha. There you go. I've spoken for so long that in any bear phase, the only way you know you're in the bear phase is if every bit of news turns into an opportunity for sellers to come in and drop the market. And to have the strength that we saw Friday, pull back, and then come back again, that to me was a warning that there was still residual strength. If today's strength comes in strong towards the close, then you have to say those stocks that I was talking about, in the sectors that I was talking about, there's still internal strength. Look at the QQQ. I'll be back to other things that we were talking about just at this particular point. The Qs have not given me yet a sell signal. If today is very weak, I probably will get the daily sell signal. The IWM, no sell signal yet. Look at the way the MACD is so strong in the daily chart, the one on the left here. GE is failing, and GE Weekly is saying, we're okay right now, but if G breaks under 26.23, it's at 26.82. We got a break. All right, we'll take the break and we'll come back. Everything's back to normal. Sorry about that, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Dow's down 30, S&P's down 2. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. So let me just finish the thought with GE. So GE Weekly has the pattern that I was talking about. Let me show it to you on the upside. It's right here. So in my CD introducing the Chapman Wave methodology, available at TFNN, it's a CD book. Slide 394 in chapter 20, what is that, chapter 24, I have the pattern that I call the falling axe. It really is, it looks like a cone on its, ice cream cone on its side, expanding cone. And what happens is when it breaks, it can go one-to-one to the upside. Well, if it's the same thing on the downside, this weekly chart says that if General Electric at any point in the next week closes under 26, you could have a one-to-one to the downside, and that'll take it all the way into the 25s. That'll be negative. When you're looking at IBM, IBM's failing here. Look at this, IBM. Allows the action down 92 cents, going towards the lows, most recent lows, retesting the Thursday candle. Not very good action. Look at Triple M, 3Ms. It made a leg D and then a peak D if there's no new high above the all-time high that was made last week at 145.53. It's in leg F. I probably could recount this and say F/C, but just at this point I have no qualms about calling it F, saying I'm waiting to see how the daily leads the weekly, and the weekly then will lead the monthly. I don't have to make a decision yet. Now, in the daily, it was a C/E, and now I'm going to have to call it an E because of the movement that we've just had. So this is, once again, a daily is now in a sell signal for Triple M. If it closes underneath 143, no, I'm going to make it safer. I'm going to say if it closes under 142.90. And that would say that's the daily. The weekly hasn't got any signal yet until it breaks under 140 to 139. But at this particular point, it's starting to show signs of energy loss. So when you look at UTX, that had a very interesting, I've tried to count this, I don't know how many ways to Sunday. I'm not sure what I can count this as because it is a peak C. I'm going to have to maybe call it a C1, C2. Maybe there's still going to be a D to go in the weekly chart above 120.66. At all-time highs, it's really unusual to fade at a peak C in the weekly chart. But I've got a leg F in the monthly. And I have to tell you, I look at these charts and I say everything about it says that the upside should be limited. The downside, I have in my back of my mind, I have ideas as to where this should go, but I have to wait step by step. I don't want anybody suddenly diving in to get 900% short just because I was saying that the monthly chart could be a peak F. I need the evidence to say that UTX, United Technologies, trading at 116.43, only down 35 cents, is going to break under 111 for the monthly chart to even start to give me any signals that are negative. So it's going to be the weekly chart that does it. And that weekly chart says 112.60 was the low the week of the 23rd of May, 112.32 was the low of the 14th of April, week of the 14th of April. Take that out, and you have got the candle, the Roman candle that I typed in a long time ago, back at in February, the week of the 7th of February of this year, with a low of round number 107 and a high of 114.74. That's going to be key. If in summer, any time in the summer, if UTX takes out 109, it should go down to the bottom towards the test of the 107. On the upside, I'll be wrong about UTX showing weakness. If UTX is able to use any support and get, it doesn't even have to get to the high of last week of 120.19, just has to get to 118.25, and I'll say, okay, maybe there's internal strength in UTX. Let's just keep watching that. And if there is, I suspect we'll see internal strength in the general market. So now I've discussed some of the things that I'm looking at. I wanted to also deal with the SMHs because I was going to do that Friday. Had it all written down, had everything ready to what I wanted to talk about, and then I didn't. And what I wanted to say on Friday is the candle that we're looking at, the doji candle that was being formed at the time, was signaling to me that the two-bar reversals that we'll be looking at based on doji candles is a potential here because it's leg E. I'm beginning to see signs in some of the technicals, not the MACD, not quite the stochastic, but in other technicals that say to me that the semiconductor market vectors ETF will give me the clues at 48.77, down 9 cents, having had a great pop to the upside of 49.18 today, trading now at 48.77. If the SMHs close at the low of the day today, I'm not saying where, but I'm just saying at the low of whatever the low is, And tomorrow, either it gaps down or it doesn't go anywhere close to the 49 level that it hit today, but in fact it starts to test the 48.20s or the 48 or maybe 47.80 area. If that happens tomorrow in the SMHs, what we're looking at is that almost vertical move of the last couple of weeks. At least there's going to be a digestive phase that will test the 46.70. On the upside, this particular candle now says that if there's with a candle like this, the day is not yet, it's 2 hours into the session. But let's just say the candle closes somewhere around here. If it takes out the upside of 49.18, that'll have to be considered very positive. You could see another 2 to 3 sessions of upside movement in that case. Right now, I'm going to go to the 120-minute chart, gap to the upside. The way it's looking right now, all I can say is that if the SMHs close under at any 120-minute bar during the day, today or tomorrow, if it closes under 48.98 on any one of those bars, and then stays there for the rest of the day, we could see an island gap to the downside tomorrow. We've got to be real careful about that. So I think I've covered a chunk of... question about Peak D says, Basil, any anecdotes about semiconductor from tennis partner? I haven't spoken to him just recently about it, but when I last spoke to him about 3, maybe 4 weeks ago, he said things are really going well. I've always, over the years, I learned very quickly that sometimes he's saying very well, but it's his particular sector within it, or he's saying things are really slow, and I'm looking at the charts and prices going up. So I learned a long time ago that I've got to treat it as just another piece of information, number one. And number two is if it concurs with what I'm looking at, and look at this, look at Intel. Intel has a spectacular move. I think it's close to being over, though. Spectacular move to the upside. Leg D, a recovery high, a huge monthly recovery high above the 29.27 high of 2012, goes to 30.15. It's in leg D. That's a leg D in the monthly, leg D in the weekly. Technicals are very good in the weekly, but this particular pattern says be careful because the candle of last week, you can test an entire candle without actually disrupting any longer term trend. But now I have to look at the daily, and the daily is in leg C. And if I'm correct about this, let me just double check here. If I'm correct about this, there's just enough strength in the semiconductors to say, whoops, not S, but a C, to say this week there should be some kind of maybe a D, and then we've got to be a little bit careful about the semis. They've had a spectacular move, just to digest alone. That kind of gain would be something. Now, leg E in AMAT, Applied Materials, one of the biggies in the semiconductor area. I've got alternate counts in the weekly, and a possible leg F in the monthly. Gosh, can't believe it. So, thought I'd go through some of those things. What I'm looking at, why I'm looking at pockets of strength, and that it won't be until I needed to talk about, finish my thought. Remember, I was talking just before I got cut off because I think there was a problem with one of the instruments we're using here. Last week there was a feeling. I had this sudden feeling. I said to myself, "Oh my! I should have been way more bullish because it looks like there could be a breakout to the upside." I mean, I couldn't believe it. But I still had the short positions on, and everything was there, and they seemed to be working. And then on Friday, after the pullback, triple digits, which confirmed a sell signal for me in the Dow, on the daily chart, that is, and then to see the double move on Friday going into that plus 40s or whatever it is close. Usually that's not what you see in this particular phase. Plus 25, I would have said, okay, plus 44. I'm looking at it and I'm saying, uh-oh. Well, it turns out that what we saw this morning with the futures down very sharply, and then what looked like it could be a tremendous move to the upside, and now a failure of that, the feeling that the short covering that occurred, the lack of bearishness out of the blue, all of a sudden everybody thought, maybe we can go higher. to me, this is all signs of some kind of a top. I'm not sure yet whether it's just a short-term top, intermediate top. My charts say that if we start to pull back and the Dow closes under 16,200 at any time in the next 2 weeks, this is going to be a far more serious pullback. But I have to wait for all that evidence to unfold. There's still too many reflexive actions like CMG, like, remember the IBB I was just looking at? Now it's down 59 cents. And there it was, within 2 cents, within 3 cents of a recovery high, not an all-time high. We shorted the all-time high within 3 points of it and still hold that as a short position. But this is different because this is that feeling, I missed out on the biotechs I should have bought. And then it fails. We'll see. Because if the IBB starts to take it on the chin and actually does pull back instead of having a high-level consolidation here, and the IBB, the Nasdaq Biotech ETF, goes under 244, closes under 244 anytime this week, that's going to be a signal to say, all right, that move could be done to the upside. Going to watch this closely. So I want you to touch all the areas that I'm being very sensitive to in positions, in what I emotionally feel, how I felt on Friday. We didn't do anything differently, but how I felt on Friday when we got that second bump to the upside, I said, ooh, that means if there's strength because there's nothing happening in the Middle East over the weekend, and the futures start to move higher, could be somewhat vulnerable. So the aspect that there was a sell-off that seemed to be related to the market interpretation that the market would not like it. Then there was some amelioration of that gold isn't actually spiraling higher at this particular point, that in fact this is just seems to me now it could be in a normal phase of watching to see whether or not a sell signal to a sell mode in the weekly charts over the next 2 weeks can unfold, or whether this is just the Fed is still in there pumping money and this is going to be another high-level consolidation. All I can say is that in terms of looking at short positions, do your homework. In terms of looking at long positions, do your homework. Why? Because what I'm looking at here is if in certain positions, if we had stayed in our positions, if I hadn't kind of wanted to tighten stops to make sure that we at least made money rather than lose money, those positions are actually still doing very nicely. So to get shaken out too early, I try to avoid it. We'll see what happens around here because there is some buying pressure, and now we can see that there's also some selling pressure. So now let's go to the volatility index. I wanted to hold this back for a little bit. I wanted to show what I'm looking at here. What would tell me that this is the move that we've been expecting for a while? Now that the volatility index is at 12.75, up 57, when the general market has been up and down and all over the show, this time the VIX is actually acknowledging that. It was fast asleep in all those moves to the downside from 17.8. Look at this. The VIX is at 12.75 right now. It hit a low of 10.73. So now let's just do all the looking at comparable things. 10.73, the Dow goes to an all-time high. On the 15th of April, the VIX is at 17.50, and the Dow was at 16,000, I'll tell you right now, INDU. And the Dow was at testing the 16,000 area, 16,015, 16,028. So the Dow's managed to rally 700 points. So that is, on a percentage basis, that is like 4% or something, right? And the volatility index, the VIX, has plunged from 1785 to 10.73, $7.7. That is huge. That is huge. That is, what is that, 60-something percent? That's a huge move. So in this particular context, what we're looking at, if the volatility index, which is now in leg B, manages by the end of the day, instead of what it had done for weeks and weeks and weeks, is at the end of the day it would just fizzle and it would get devalued right down to make a new low if instead it closes somewhere near the upper part of this particular candle, which is the high is 12.87, it's at 12.72. If it closes anywhere near there, then the general market, the Dow closes only down 20 and the S&P closes up 1, let's say, that'll be the first sign that the VIX is actually awake and alive. I'll be right back. Basil Chapman, this is the Tiger Technicians Hour. I'll be back. Dow's down 42, S&P's down 3.5.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I had a question. I think this is such a very good question here. Just sent to me. Zeke asked me, Does the Chapman wave get interrupted by geopolitical events, like a break before all legs play out? What happened in 1990 when USA invaded Iraq, for example? What wave was the market in? So I should be able to show you something a little differently. Let me see if I can hoist this up. No, I can't. Yeah, I can. There you are. Now, this particular chart, I only have it going from notated. I have many others, but this one going from the low of after the 1987 crash. So this is October of 1987. It went peak A, B, C, D, E, and then there was the sharp pullback January of 1990. And then you remember it was it 1990? It was January the 16th. There was this huge move to the upside. I think that's when it was. And then what happened was you started a brand new move that took you all the way to right arm extension leg F, and then the Dow plunged. So geopolitical, to me, I've been doing this for a very long time. To tell you the truth, usually the geopolitical aggravation starts after I've got a peak E or an F. And where are we now? So this is the chart I'm showing you with the black background. It goes all the way back. I wanted to show the channels on this chart, the beautiful channels. And look what's happened. We've got another channel that's just right here. This is a little different. This is the Dow. The S&P is actually quite a bit different to that. If I could find it, I think I've messed everything up here. Yeah. Okay, so maybe get this out of the way. Here's the S&P. Look at this S&P chart. Look, there it is. And that is just pushing up against the top of the channel line. So this, everything about it says, this is the area that we could start to see some kind of a failure pattern. But it's not a failure pattern because altogether from final top, I don't believe that final top will come for at least maybe until early 2015. But a serious pullback is possible, and it could be sector by sector. So the answer is, geopolitical. Usually the conflagrations occur on the way down after you've got into a sell mode. So we'll see what happens. Quick question about the XLK. This is the S&P Select Technology Spider Fund. Doji top, little tiny candle at the top, just like I was talking about. Apple did it at the top. Look at Apple's one. Remember this one, 507 or 705, whatever it was. Hey, have I lost all my notation on Apple? I don't believe this. I got to do it all over again. All right, I'll show you the candle. Getting very upset with this. Very, very upset with this. All right, I can't do it now because I don't remember when. Oh, there it is. Right. No, I can't find it. I can't remember. Oh, Apple split. Of course, I got no notation on Apple. I got it all over again because it's split. So the top was for Apple in September of 2012. I wonder if I can quickly find that candle. Maybe I'll do it tomorrow. Now, I want to just tell you that Larry comes on straight after me. So Larry Pesavento, trade what you see, and you've got fabulous shows all the way through the day. And I don't think I can find it. So, little doji candle, I can't remember. I'm not sure I'm going to be able to find it. I'll do my work on Apple. I'll renotate it for the Chapman wave for tomorrow or the next day. So, in the meantime, watch closely. If the Dow comes back towards the end of the day, it says there's enough residual strength to make this a high-level consolidation, and we might rotate through different sectors, number one. Number two is if the volatility index starts to push higher, gets into the 13s by today or tomorrow, that says, uh-oh, watch out, selling is going to come in. And that's where you get the geopolitical stuff that goes on. So I'm watching this real closely. We're predominantly short, and at this particular point, that's the way we're going to stay for now. And, folks, have a wonderful day. Stay tuned for Larry. Stay tuned for all the shows. Check out my stuff. My opening call, take the front page of TFNN, 2 weeks free. And I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.